Hello everyone. So now the thing about the stock market is one way to have some sort of prediction as to where the market is going is to look at where the big funds are actually putting their money, right? So we're going to share with you our thoughts on first Malaysia and then after that global as to where the so-called smart or big money is flowing to. So let's start with the Malaysian one. A quick announcement. Viral Pro will be having a special 40% discount for all new subscribers. This offer will end on 11:59 p.m. 4th of November. If you want to grab hold of this discount, head over to our comment section or description. You know, the stock market has been doing quite well, right, this year. I think this is the best year in a very, very long time, maybe even a decade. However, if you just zoom into October, it's down a little bit, right? From, if my eyeball is correct, 1655 to now 1618, give or take.
Yep.
Now the recent sell-off, which just happened in the past 2 weeks, largely due to foreigners. This is confirmed.
Yeah.
Right. And it also coincided a little bit with the ringgit appreciating. So ringgit fell the lowest, I think 4.15. Today is 4.3, 4.35, something like that.
Right.
So yeah, but what is the overall thoughts on this?
Yeah, so this one is just to tell you that foreigners are traders. I mean, they will always be rotating here and there.
Rotators,
Yeah,
yes.
they will follow what is the next team, what is the next biggest trend. And yeah, so this is why you see that temporarily is now on the downfall because foreigners are exiting. Now, if you look at by sectors for the past 4 weeks or 1 month, you notice that a lot of them are actually in the down, especially for utilities and also telecommunication. So this one is down 6.2.
And then of course finance right behind them.
Yeah. So finance, obviously because there's a rotation. Initially, local institution and also foreigners are buying up banks because they thought that was kind of like safe after the data center catalyst. Then after banks, then after that they rotated to some other small little construction or property companies. Then they went a bit into utilities and also telecom. And right now you're seeing that they are just exiting. And currently the only few sectors that is in the green are property, tech, healthcare, construction, plantation, and also REIT, which is interesting because REIT right now is the most is a popular one.
But you can see the volumes, the value is also the lowest.
Yeah, exactly. Probably also because of the dividend that they want from the REIT and probably the interest rate lowering.
But I mean, I can share. I think if you look and you put it alongside property, construction, and REITs, generally these three industries are on the up. We know NAPIC data showed in Malaysia. I'm not sure if this is Q on Q or year on year, but the point is rents are up 4%.
Yeah.
So I noticed because of some of the properties I own, the building that we're in right now, rents have actually gone up over the past 1 year-ish. So yes, it makes sense.
Yes.
And of course, REITs, they, part of their income is rental, right?
Yeah. And plantation right now, it is getting quite popular is because of the CPO prices.
Yeah, I think it hit 4.4, 4.5.
4.5 right at the moment. Yeah, I think at the height was like 4.6.
Yep.
So right now, probably some fund houses
I think today, as we record this, down, I think 1%, but yeah.
Yeah.
Okay, so this is...
Yeah, so these are the few companies that is related to the telecom and also the utilities company. So you see that Celcom DG, Maxis, YTL Power, and YTL Corp, they are all on the downtrend at the moment. So for YTL Power and YTL Corp, this is quite a special case because right now they are undergoing an MACC probe. They are undergoing this investigation at the moment.
So in a way, it's non-fundamental, you can say?
Yes, you can say that it's non-fundamental. You also can say that it's some sort of fundamental because Jensen Huang, which he visited in Thailand. So there were rumors that they say that maybe YTL Power may not get like a sticky contract with NVIDIA and he'll go for Thailand. So yeah, that's just a rumor lah. But the main thing is right now is just that foreigners, their main mantra is that if let's say a company has a corporate governance issue, they will start to exit first without question. Even though the fundamental looks good, they will just stay away for a while.
That's right.
Yeah, but for Maxis and Celcom DG, this one we don't know. Probably this one is just like maybe the earnings are not so good, most likely. But we shall see in the next few quarters. Yeah, so another interesting thing is that most of these companies or sectors that are down is actually happening right after the budget 2025. And you can see that some of our takeaways, right? And based on the chart that we see, it's very volatile because based on past brief budget, we cannot really predict whether the market will go up or down. So right now, pre-budget 2025, it went up, but then post, it actually went down quite a little bit. So yeah, it's actually very volatile, and it depends on where the foreigners are actually buying.
So since 2021, it's actually 3 up, 3 down.
Yes.
You can say, yeah.
Yes, exactly. So yeah, basically it's an unpredictable market. Now, another thing that is crucial to know is that the Brent oil right now, it is still on the downtrend.
Which is interesting considering that this whole year we have wars and all that in the Middle East.
Yes, and initially we have like a bump over here. I think it was like just a few weeks ago. And the reason why it went out because you can watch out our previous video on the Middle East war, whether is it happening or not, because Israel decided to not attack their oil facility. So when they say that, then the price go down again. And then another news that says that the non-OPEC and also the OPEC players or countries, they will be increasing their production. So all of these are kind of like resulting a Brent oil to go down. Yeah, so this is what we have mentioned just now. Oil price will likely to fall because they are restraining to strike on Iran. Now, then you can see that two of our biggest players for the oil industry, which is PETDEC and also PCAM, they are still on the downtrend, even after for 1 year already. Partly also is because of actually not partly, majority is the reason is because of the oil prices have been going down. PETDEC, I believe, is because it has to do related to the Raw 95. So that's why it is right now going down. So yeah. Okay, just now you also mentioned that
there's a spike up.
There's a spike up, which means that some of the foreigners are actually selling ringgit and they are buying somewhere else, probably in China or maybe other even emerging market or probably even the US. Because later we're going to be showing what is happening around with the global. But so far, this is the local
scene. Okay, so global, now rate cuts, the English-speaking countries, right, are experiencing a rate cut, and then the only sort of non-Western one here is China. Even then, it's a small amount.
Yes.
Yes.
Yeah. So right now they are already feeling the pain already for keeping rates high for quite a number of time. So right now they are all just following the US, Canada, EU.
Yeah, I think I was sharing with you this. I think last week that the rents in UK have actually gone up. Mortgage payments in UK has actually skyrocketed from 700 odd pounds per month. And now it's 1,444 pounds per month, which is like
more than 50%. Yeah.
No, it's 100%. It's a double,
700. Yeah, correct. Double. Wow.
It's a double. So bullish. So we are looking at the sentiment, and it's actually on the uptrend. Right?
Right now, most of the fund managers are actually still increasing their allocation towards the equity. Even though there is a presidential election coming, they are still like, you know what, the market, the companies that they see are still quite cheap. That's why they are still buying up.
In fact, the betting odds for Trump to win now is higher, and the payout is actually lower now. So if I'm not mistaken, if Trump wins, the payout is like 1 to 1.6, and then if Kamala wins, 1 to 3.
Oh, okay.
Yeah, interesting.
Okay. But yeah, so
it changes very fast, right? So we don't.
Yeah. So right now, basically, the global fund managers are still bullish with equities, and this is also another backing because their cash level is even all-time low. So you can see that initially for the past few months it was about 4.2%. Now it's 3.9%, which means they're still deploying cash to buy certain assets, and definitely not bond also, because you can see that bonds are still at the all-time low. And where they are putting their money in is actually in equities.
Quick announcement. Viral Pro will be having a special 40% discount for all new subscribers. This offer will end on 11:59 p.m. 4th of November. If you want to grab hold of this discount, head over to our comment section or description.
So this is where the biggest money it is at. You can see that the emerging market equities have the highest right now, and this is obviously because of the China stimulus. That's why that kind of attracted a lot of big funds to rotate money there. And the second thing, which is quite interesting, so that one is commodities. Now, why this is interesting? Because the US right now is kind of like trying to curb inflation by initially raising rates. So what if when demands for commodities start to go up, this would kind of like prop up inflation, right?
Yeah.
So if inflation prop up again, which means they would start to pull the handbrake in reducing rates. That there's a possibility of that, because right now commodities is right now on a high demand. You can look at gold, you can certainly look at palm oil, you also can look at soybean. They are all kind of like going up. So yeah, that is where the big funds are actually placing their money. And you look at equities and US dollar, this one they only invest,
Not doing as well. Yeah.
not as doing as well. So you can see that the least favorite among the asset classes are actually government bonds, Japanese equities. I think that one is
It's quite interesting because just I think a year ago, suddenly people were really
keen
pro.
about it. Yeah, right now it's like bad again. Then followed by gold and S&P 500. So you can see that they are not really that keen to invest in S&P 500. Yeah, so this is a chart that you shared in the Alfire Pro group, and basically what it means is that the valuation for the S&P 500 is actually quite at a premium.
Yes, so premium relative to the history. For those of you who are stats nerds, we are in the second standard deviation. So if you can see on the right side, the green chart, you see those lines, right? There are 4 lines separating, okay? So the one in the middle, okay, is just the middle. And then the one at the side, which is, you can see here, so like here, and then here, that's 1 standard deviation. And then the one outside the line will be 2 standard deviations. Okay, so what does it mean? It means that, okay, so you can see the graph here. We are already approaching 2 standard deviation. It means that 95% of the time the market has been cheaper, based on a very specific metric, which is market cap divided by free cash flow, or free cash flow divided by market cap. Free cash flow yield, they call it, when it comes to the S&P 500. So it just says that, hey, the market has only been more expensive in history 5% of the time for the S&P 500. Does this mean that we are going to have a crash? No. Does this mean that probabilistically we are closer to a crash or a downturn, rather, I would say? The answer is also yes. But we do not know how much it will experience a downturn. And more importantly, if it happens, we do not know how much more it can go up. Because even though it's in the second standard deviation, which is a rare occurrence, it can go to 3 standard deviation. That will put it, 99% instead of 95%. So then that's just the S&P 500. Then on the left, you have the S&P 493. Now, why this is important is because people will say, oh, it's not fair to use the S&P 500 chart because the returns and the valuations are largely dragged and stretched and driven by the Mac 7, the Magnificent 7, which is your Microsoft, Google, Amazon, these guys.
Yeah, NVIDIA.
So even when you separate it out, yes, the valuation does drop a little bit, and that will give us, actually I can't see it totally, that will still put it in 1 standard deviation odd territory. So I think it was just before that. So yes, in a way it's true, right? If it is, but that said, if you look since 2009, the trading 12 months PE is still closing in on a high. So actually, sorry, yes, 1 standard deviation. I was wrong. So 1 standard deviation for the S&P 493. So yeah, even if you remove the staff performance, we are still approaching more overvalued. And I remember the last time this happened was between 2019 to 2020, and we know what happened after that.
Yeah. So yeah, and that also explains why they want to exclude Magnificent 7, because the Max 7 right now is the most crowded trade in 2024. But you can see that the interest right now is actually dropping from August to all the way to October. And gold, long gold, is actually increasing. I mean, you can see that gold prices are at all-time high.
Cool.
Yeah, and then
silver as well.
Yeah, silver as well. Yeah, and then there's another interesting thing, which is once China gave out the stimulus, then there's a lot of long China equities already. Bond is still flat. Long corporate bonds also has been increasing. Short oil, so it's very interesting. which means they are kind of like expecting oil price to go down. That's why they're shorting. There's some sort of interest in October 2024. So probably this is something that you want to watch out for. And this is also another table that you have
so
shared.
Nvidia is already bigger than so many different stock markets in the world, right? Canada, UK, France, Germany. That's quite crazy.
Yeah. So basically, Nvidia is the one that is lifting the returns
for good reasons. But of course, I think this is reminiscent in part, right, of something that Monish Pabrai, this investor, talked about the Japanese market in the 80s, where the palace in Japan was worth more than all the real estate in California. So somewhat similar, right? Of course, the palace of Japan don't generate cash flow, so it's not as not as an investment is not as interesting as Nvidia, but you can see the parallels.
Yeah. Or you can draw another one parallel, which is with Cisco in the 90s.
That's right. That's another one.
So this is Nvidia in the 20s right now. So yeah, so that is what is the positive thing that they are seeing, right? But the biggest tail risk that they are looking at, it is geopolitical conflict. So this one obviously it will happen because Trump is coming soon for 2024, and assuming that he wins, definitely there will be slightly more tension. And because his policies are pretty clear,
I would say there is more trade tensions, but geopolitical tensions might not be as big because we've seen in his first 4 years, he doesn't actually like wars a lot, right? That's why he introduced like the Abraham Accords, or at least he worked with Israel on that to be more diplomatic. I think if Kamala comes in, then yes, there'll be more geopolitical conflict, but maybe less trade conflict.
And also probably also this have to do with something with the Middle East war also. So that's why they are putting it over there. Another one is global inflation accelerate. So this one also is another risk that they are thinking, because obviously commodity is right now going up. So they think that probably rate cuts would start to either they'll pause it or maybe potentially increasing. Now what's interesting is that they say that recession, the likelihood of it happening is actually gone down a lot since August 2024. So that is what they have been looking at. US election sweep. This one also, they have been very, they think that this is one of the biggest theories. Systematic credit, this one is still okay lah. This one has been going down. So yeah, so those are the two local and global scene. Now, what you as an investor should do. So one thing you need to know is that the market is always forward looking. So what is happening right now? Let's say if you look at YTL Power's share price that is going down, right? So what does it really tell you, and why did it even go up in the previous times? So in the previous times, because we don't really have much of an information on what is going on internally on their organization, the market always focus on the business or what is happening at that moment. At that moment of time. So right now the price is going down. Does it mean that it's undervalued? Probably not, because there is new information that we never discovered in the past, which is potentially there is some sort of internal issue. But this we still don't know yet lah, because it's still ongoing investigation. So, but business-wise is still fine. But the thing is that right now, because
if this investigation has become intense, and let's say there's a big fine and things like that might hurt the company.
Yes, exactly. So,
and of course, because usually it's like that, right? If one rat comes out of the kitchen, people ask how many other rats are in the kitchen, right?
Yes.
So that's something that people always ask.
Yeah, exactly. So yeah, this is how you need to pay attention. If you believe that the manager has nothing, no issue, right, then probably it is a good chance of undervaluation. Now, the second thing that you need to know is the big money is always rotating. As you can see from today and even last week, right? You can notice that foreigners are net buyers, then today they are net sellers, and they are buying something else. So yeah, they are basically traders, and you want to buy when actually these kind of foreigners are selling.
There are two things you can do. The first is when you see big funds buying and exiting, then you can follow them, like the little fish following the big shark. Or the second way is to just suck up all the volatility, right? Like you buy companies that you believe in, so it doesn't really matter if people sell, even there's a sell down, maybe you add more or you just stay the course. The time in the market is better than timing the market, some people will say, right?
Yes, exactly. So yeah, you need to know that they are always uncertain with their movement. Okay, so the third one, sectors that we think will benefit. So number one is that probably we already know for a fact that gold is going up, and based on other fund managers' opinion, they also think that gold is the best place to put your money in at the moment. But other sectors that we think that we may benefit, maybe you can give one sector each. So for me is that
Quick announcement. Viral Pro will be having a special 40% discount for all new subscribers. This offer will end on 11:59 p.m. 4th of November. If you want to grab hold of this discount, head over to our comment section or description.
I have been a palm oil bull for quite some time already, since actually February 2024. And I still believe it will. Simply because the demand has been increasing while supply has been stagnant, or in fact it has been dropping. So yeah, I mean, if you want to know more about palm oil industry, you can actually check out Fire Pro. There we discuss quite intensively over there already, and there's a lot of information shared. What about yours?
So I mean, I'm still gonna go with tech, but the problem with tech is there's the valuation issue, and I think there are going to be new winners. So in the past, if you want exposure to tech, it has always been okay. Vitrox, Unisem, MPI, Inari. These guys. I happen to think there will be in a way, a change of the guard. There'll be new guys coming in. One candidate for this is you can say Skychip and Opstar. These two, where they will replace the old tech giants in Malaysia. The difficulty is in just figuring out which company will do well, right? If they're even listed, that's the other thing. So, but yeah, but we have to work a lot harder, right? It's not like palm oil. Palm oil, it's a sector that doesn't change a lot, right? I mean, you're the expert, so you can tell me, right? There are really only few things you need to care about, right? The market cycle. So, at what price are you hopping in when it comes to CPO, which of course has to do with supply, basic supply demand. Number two would be linked to that, the valuation that you're going to pay for it. And number three, of course, the kind of trees that you have.
Yeah, age profile.
What is the age profile? Are you too early, too late? Just nice. And there's a fourth one would be just the people managing it, right? So whether they manage the money, right? United Plantation is probably the best palm oil allocator in Malaysia.
Yeah.
Of course, there are others as well.
Yeah.
But you agree, these are the four big things that.
Yep, correct. So those are the four. If I were to add one more, it is probably how they manage their estate lah. Because some palm oil companies like Boosted, Boosted Plantation, what happened to the company? So that plays a role. But that is also something to link with the management, how they are running the business. So the last one is what the big funds will be doing next. And you can see that the chart that I shared over here, it is the unrealized gain on investment securities for most of these banks in the US specifically. You look at, they have a huge unrealized loss, but this one, some of the people say that it is still okay because they bought it at a time where the interest rates start to, or suddenly spike up very high. That's why they cannot really mitigate that kind of losses, and they expect with rate cuts, these unrealized losses would shrink.
Okay.
Yeah. But then that still doesn't really explain the reason why Buffett sold Bank of America aggressively. If you look at his stake in Bank of America, it has been reducing quite a lot just for the past few weeks only. Probably he knows something that we don't, or maybe he just simply want to raise more cash. But our opinion, or probably I'll share mine and maybe yours, what they'll do next is still, I think that they may park their money in China, because
it's so
stimulus,
down.
It's so down. So probably they'll still buy up, but that doesn't mean that you need to chase for China stock. And then another thing is that obviously commodity is also something that they have been looking at. You already can tell from the prices like palm oil, it's already going up at not all-time high yet, but it's already surpassed the previous high in March. April 2024. So I think these are the two main places that they will be parking their money. If not, they will start to raise more cash because cash has been all-time low at the moment, and probably they want to save some money and not staying invested for too long.
Okay.
So what is your thought?
My thoughts, I don't know. I mean, with this big money is not necessarily smart money, and they can change their minds very fast for right or wrong reasons, right? A lot of big funds did not get into Nvidia early or Tesla. a lot of big funds did not get into YTL before when he had the run up, or some of the names that we covered, MSM and all that. So for me, I think the most important thing is to really know your strategy and then stick to it, refine it over time, and just do that. It doesn't really matter what big money is doing.
Yeah.
Okay, so announcement, guys. On the 5th of November, we will be increasing the Fire Pro price to 597 from the current 557 US dollars per year. But for a special period leading up to 5th of November, we will give you guys a sweet deal at 334 USD only.
Yeah.
So that is roughly in ringgit terms, I'm going to say 1,003, 1,004?
Yeah, 1,004 around
1,004, right?
1,004.
That is less than a gym membership a month. Typically, a gym membership is what, 200, 150 ringgit. All this, now what you can get, of course, if this is the first time you're hearing this, the program is designed to reduce your research time by 90%. Right, research is a very time-consuming thing, right? You have to find a company, you have to read the reports, you have to read articles, maybe you have to go on forums to find out small little bit of information. And the worst feeling you can get is by the time you finish all of that, you realize this is a company that not worth investing in. So what we do is we do the research for you, right? So all that hard work and hours that you put in gets reduced to just reading our write-ups. Less than 15 minutes.
Yeah.
That's all it is.
And also, a big change is that we are going to be separating some of the global stocks that is inside the Fire Pro initially, and we're going to be separating.
So we're launching the global Fire Pro portfolio, FPG for short, right? And if you want to be the first group that comes in to check out what's inside the portfolio, this is the time, and we have a sweet discount.
Yeah.
Okay, you want to get a sense of what these write-ups look like? Just head over to the free sample section. And with that, guys, I will see you in the next video. Bye-bye.